My name is Dave Wise, and I've been trading professionally for about 17 years now, full time. And we're going to talk about what's called the SPY Super System software. This is a piece of software that I run on Thinkorswim. I don't trade there, but this is going to tell us when the institutions are coming into the trades, when they're not. And I have a live trading room, an options room that we trade. I trade every day. I'm in there every day from market open to market close. I do take a little time for lunch, but I'm in there every day live. And I also have a text alert service where we send out alerts on our highest probability trade setups that we find. All right, so let's get started. First thing, of course, I have to do is my disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, and if you have any questions for me, just pop them in the question box. I'll leave it open along the way. If I can't answer it or you haven't got time, if you go ahead and put your name and phone number or your team username, Skype doesn't exist anymore, but team username in the chat box, and Rory from Right Line will give you a call back and answer any questions you might have as far as subscriptions and any questions I can't answer. Okay. First, I want to cover what kind of trading we do in the trading room and on the alert service, just so you can get a feel for what we do. Again, most of these trades we do, they're going to be either intraday trades or relatively short swing trades, which would be overnight out to about 3 weeks or so. We obviously do straight calls and puts. This is the most common thing to do with options. But we also do straddles and strangles. These are non-directional trades where you're just looking for a move, big move one way or the other on a stock. You don't really care which way it moves. And they're excellent strategy, especially with volatile stocks that you never know what they're going to do. I did some of these on silver this week, and they worked out pretty well. Debit spreads using weekly options expiration. This is another option strategy. I also do what's called time spreads. These are a calendar spread setup. This is where we take advantage at earnings time. Just before earnings comes out, we take advantage of capturing what's called the implied volatility crush. Option prices get jacked up before earnings, and after earnings they come right back down again because the implied volatility comes out once the market makers know which direction the stock's going to go and approximately how far it's going to move. And then we also have a strategy called the weekly ATM strategy. We just put one on yesterday on Schwab. This is where we sell puts every week against a neutral to bullish stock, and we capture that premium as basically a credit every week. And meantime, we keep a longer dated put further out in time to protect ourselves to the downside. So this is a very, very forgiving strategy. It works really, really well. And if it goes against you, you can adjust it and still make money on it, which is pretty nice. We also do credit spreads to capture premium over a few weeks. We also have intraday strategies. These are the strategies we use in the room for trading intraday trades, relatively quick trades. Two of these, I have the SPY Super System for very high probability trades. This is to catch moves in the SPYs, the Qs, the IWM, the Russell futures, and even stocks. You can use this for stocks, but these are quick trades. If you're using 5-minute candles, which is what I do for the intraday trades, they may be 1, 2, 3, 4, 5, 6 candles long, but they're not going to last a long time. So they're relatively quick. The other thing we have now is what's called the UMCAT, high momentum, high volume trades. This is a new strategy we've added recently to the room, and this captures high volume trades with a catalyst, and we use out of the money calls and puts on this. And I have a video on this. This is very, very specific because taking out of the money puts and calls is not generally a good idea. But if the criteria is set up good, right, then you can make really, really good returns on these. So I use these, and I use the SPY Super System as well. Now, the reason I'm bringing up these SPY Super System intraday strategies is something's going to be happening this year in 2006. This is a fairly dramatic change. There's a thing called the PDT rule. That's pattern day trader. And as of right now, for trading stocks, options on stocks, if you don't have $25,000 in your account or a cash account, but if you don't have $25,000 minimum in your account, then you can only trade 3 intraday trades in a 5-day period. That's what's called the PDT rule. pattern day trader. But they're going to reduce it being reduced here sometime in the near future, and it's going to go down to the estimate is between $2,000 and $2,500. So this is going to open up intraday trading to an awful lot more retail traders. And what we want to do is we want to take advantage of that by having more fast, disciplined, momentum-based strategies for intraday trades, because there's going to be a lot of retail traders in there, and most retail traders that you trade against are not going to know as much as you do. They're not going to have the strategies you do or the information you do. So this is what we're going to do, is what we're trying to do is prepare traders now for a far more accessible, far more active market environment. And this UMCAT trade that we've got here, we're talking about here. I'm not going to go into a lot of detail on it, but it's very, very effective. And the gains are percentage-wise much larger than regular because of the fact that you're taking out of the money. But it has to be done on specific conditions, and your exits have to be very quick. Okay. This, by the way, is just a graphic of the alert service. We call it Compass alerts, but it's actually the SPY super system now. But these are how you get the alerts. It's an SMS service. When I put out a high probability trade setup, they were talking about the room, and we take it in the room. I'll send an alert out, and you'll get it in. You know, it takes to get to my phone. It takes about 10 to 15 seconds or so. So it comes out pretty quickly. Okay. So we'll talk a little bit more about in detail about this now further along here. First thing I'm going to talk about here, and this is obviously really, really important, and that's what moves the markets. What moves the markets? What creates trends? What breaks trends, etc. And so the market consists of many retail traders like this, many small retail traders with the little marbles right here. We can't really move the market, but there's millions and millions of retail traders. What moves the market is the institutional traders right here. And I'm going to get into a little bit of detail about this right now. This is more what it looks like. Here's your institutions, and here's us with the little marbles down here. Keep in mind, when the institutions are not in a trade, or they're not in a trade in force, institutions are in trades most of the time, but a lot of times they're trading against each other and not with very much volume. When mostly retailers in the market, when that's mostly retail traders are trading a stock, it's going to just basically chop around. You're going to get a lot of chaos, a lot of chop. It's very difficult to make any money. So what we want to do as traders that are trying to be consistently profitable is we don't want to be in the trades when there's just retail traders are in there. We want to be in when the institutions are in. And to understand institutions, they're made up of basically four categories. They're made up of obviously they're made up of investment banks, Goldman Sachs, JP Morgan Chase, Bank of America. All those big institutions are part of those big investment banks are part of the institutional group, right? Now, it also includes pension funds, which are huge funds of state workers, firemen, police, hundreds of these pension funds with billions and billions of dollars, by the way. And then you have the next category, which is hedge funds. And hedge funds make up another huge part of the institutions with more billions of dollars to trade. And the last one would be pension funds. I'm sorry, the last one would be mutual funds, which would be things like Vanguard, T. Rowe Price. There's a lot of big mutual funds who again have billions of dollars, but all these groups is what makes up the institutions, and this is what pushes the market. And this is what our job is to identify when they're actually doing this. Now, it's important to understand that especially investment banks, most of their trading is done through computers, computerized programs, which are called algos. You probably heard about algos. Algos are computer programs that are coded to look for specific conditions or specific news. They actually optically read news, and they trade accordingly. So that's what they're looking for, and that's where most of the volume comes from from institutions. It's coming from algos. They do have some desks where they actually trade, but mostly it's all coming from the algos. And if you want to see a prime example of this, if you look at for example, the FOMC, the Fed, when it made their announcement on Wednesday at 2 o'clock, if you look at the volume that was on the SPY, and you look at it at 2 o'clock and about a second, what you're going to see is a big burst of volume coming in, either driving the market up, driving the market down. Now, there's no way humans can actually enter a trade that quickly. That you couldn't even get to your mouse in time to do that. That's the algos who've already read the Fed report, and they're basically trading based on that, and they have specific conditions they're looking for. But that's what the institutions use mostly is algos. All right, so this is what drives the market, and our job is to identify when the institutions are pushing a trade and when they're not, and it's really important for us to know that, because this is going to keep us out of trades that we shouldn't be in because they don't have as high a probability of being successful, and it's going to keep us in trades where we have a much higher probability of being successful. Okay, so that's what drives it. Now, one thing here I want to just quick talk about. This seems a little off topic, I guess, for most people. This is a blackjack table, ace, jack, spades, blackjack, couple $100 chips, and this is what blackjack is. So what has this got to do with trading? And when I first started trading a long time ago, a lot of the feedback I got from friends and relatives was that it was gambling. It was fixed. You can't beat it. You're just wasting your time because you might as well just go to Las Vegas. And interesting thing is, when I was much younger, I did go to Las Vegas, and I was actually I made my living playing blackjack as a card counter. And just so you know, card counting is not actually counting individual cards. It's keeping track of what the composition of the remaining cards is, how many big cards and how many little cards are left in the deck. And just as a kind of a primer, as the little cards are removed from the deck, and there's more big cards than there normally would be in the deck, the advantage swings to the player. And if there's more little cards in the deck than big cards normally, then it swings to the house. And what we did was we kept track of what the composition of the remaining deck was. So this gave me a mathematical edge over the casinos by knowing when the cards are in my favor. And I did this for a couple of years, and I didn't really have any responsibilities. It was pretty nice. It was an interesting life, and but I did this for a long time, made good money at it, and I didn't know that it would have to come in handy as far as trading is concerned. But the reason I bring this up is I had a method and a strategy that had a mathematical edge. So trading stocks and options is very similar in that without knowing what the institutions are doing, the trader doesn't have any edge. So in essence, they're gambling. So you really are gambling if you're trading stocks and options without knowing what the institutions are doing, without a strategy and without a methodology that you can consistently trade. Now, it's important to understand one other thing, and that is whether you have a system that works and it's the greatest system in the world, you both playing blackjack, counting cards, and trading stocks and options, they both require discipline and emotional control. If you don't have discipline and you can't stick with the strategy and you don't have emotional control, you start getting impacted by your P&L. You're suffering from greed or fear or enthusiasm or revenge. All these kind of emotions come into trading. You've got to be able to keep the emotions out of the trading and have discipline. Stick with the strategies that you know work. All right, very, very important. Now, I consider the SPY Super System, which I'm going to show you as this piece of software. That's my card counting system. It gives us an edge over the other traders, allowing us the ability to become consistently profitable. Now, that's typically what we're in the business doing this for, is to make money. And now the SPY Super System, the software, in conjunction with identifying the very best high probability trades, can lead to consistent profits. So we can identify a lot of stocks that institutions are in. Then we have to drill down and find the very best ones of those. Okay. Now, in the room and on the in the alert service, I have a couple of rules to trade by. Trade the best and skip the rest. And we only trade the very highest probability trade setups, and we skip all the others. And this is really important because if you can bypass trades that would have been losers, that's just as good as taking a winning trade. And so we don't take a lot of trades. We take a limited number, just the very best, and we skip the rest. And again, our objective is not to make trades. Our objective is to make money. Now, this is kind of geared toward people who, retail traders who trade too much. They're sitting in front of their machine. They want to make a trade. They haven't taken 1.5 an hour, so they justify any kind of reason for taking a trade. And so basically what they're doing is they're trading to trade. They're not trading to make money. And this is important. Our objective is not to make trades. Our objective is to make money. Maintaining discipline. We have to learn and follow the process. Learn the criteria. You use the SPY super system to let you know when the institutions are in the trade. Follow the process. Learn the process and stick with that. That's where discipline comes in. And remain patient. And this is really important because you're going to have a lot of situations where you feel like you want to get into a trade, but it's not where it should be. You've got to wait for it to come to you. So be patient, remain patient, wait for those setups. And we're going to look at a lot of those here today. Profitable traders, we need an edge over other retail traders because that's who we're taking our money from. All right, we're not taking our money from institutions. We're taking our money from other retail traders. We're trading with the institutions when they're in the trade. Our edges are the SPY super system software. This is the #1 thing. This tells me whether the institutions are in the trade or if they're not. We trade what's called relative strength and relative weakness. This is really, a lot of retail traders, this is very much overlooked. This doesn't mean RSI. I'm not talking about an RSI indicator. I'm talking about looking at what your stock is doing and how is it moving in relationship to the S&P 500 or the triple Qs, the SPY or the NASDAQ. How is your stock trading? If your stock is moving up steadily and the SPY is moving sideways or down, you've got relative strength. This stock is going to outperform most other stocks. And same thing on the weakness, the relative weakness side. If your stock is moving down and the market's moving sideways or up, it's got relative weakness. It's going to outperform most of the other shorts that you take. Okay? We trade with the market trend if there is one. There isn't always a market trend, but we trade with a market trend. And we try to buy near support and sell near resistance. This, again, is extremely important because if you can get into a trade right near a support level and the stock turns against you, your exit's going to be really quick. You're not going to lose a lot of money if you get out right after it goes below your support level. So buying near support and selling near resistance is important, and it's very important to keep people from chasing trades when they've extended up too much. All right. So those are the 4 keys here. If you're trading like this, if you're trading with the institutions, trading relative strength and weakness, trading with the market trend, if there is one, buying near support and resistance, you're already ahead of about 98% of the other retail traders in the world. The Compass system, which is now called the SPY super system, I'm going to show you. It identifies the highest probability setups by sidestepping setups that look good, but they'll fail more often than they succeed. Right? And again, it does this by identifying when institutions are driving the move. And I'll show you these charts. It analyzes a lot of complex data and displays the results in an easily identifiable visual format. And this is kind of important because this allows a fairly new trader to take a look at the SPY super system and determine whether the institutions are in the trade or not, whether it's a decent trade to try to take. And that speeds things up a lot as far as your learning curve and your ability to get profitable quickly. Okay, again, so this gives us an edge over other retail traders. We only take trades that are being driven by the institutions. We're trading stocks that have relative strength or relative weakness to the SPY or the Qs, not RSI, and we trade in the direction of the overall market. This is the key here. Again, our trades will be supported by institutional buying and selling. They'll be outperforming the index with the SPY or the Qs, and they'll be moving in the direction of the overall market. This is a very key thing because if this is the kind of trades you're taking, you're going to be head and shoulders above every other retail trader in the world. And there's tens of millions of them. Okay, going to talk briefly here about the SPY super system. And again, this is a piece of software. Now we have strategies called SPY super system strategies that we use for high volume trades, etc. But the system itself is called the SPY super system. It's important to understand this piece of software is the critical element in finding and trading the highest probability trades. The SPY super system software is the engine that drives our results. Now we're going to talk about the results I've had trading this over 4 years now by using this software. And the results are pretty extraordinary. I've had by 85 to 90% win rate. 85 to 90% of our trades over the long term are winning trades. And we make some really, really decent percentages on these, and I'll show you those. But it's important to understand when you see these results, the ability to identify when institutional players are driving a bullish or bearish move and when they're absent. This is the key factor in pinpointing the high probability trade setups. It's really important. And that's the function of the SPY Super System software, and it's a critical component of trading successfully with the institutions. Okay, Rightline does have Rightline has a YouTube channel. I'm on there every day at about 11:30 for about an hour, 11:30 to 12:30. If you come on there, you'll be into the room. You can see the room where I'm there every day, and I'm there every day from market open to market close. I answer a lot of questions. The traders will ask to see a chart. We'll take the charts. We'll take a look at it on the SPY Super System. We'll take a look at more technical analysis on it. But I'm on there every day from 11:30 to 12:30. Okay. The SPY Super System, by the way, we've got on it's color coded for our indicators. 4 colors: green, obviously bullish strong; blue is bullish trend; red is bearish strong; yellow is bearish trend. Right. So those are our colors that you're going to see on the chart. And what I'm going to do here is I'm going to show you the chart. Then I'm going to move over and do a section on Fibonacci candles, because I know a lot of people want to talk about Fibonacci candles. So I'll do that next before I get into any more detail. But this is what the SPY Super System looks like on Thinkorswim. All right. And it also can run a Ninja, but I use it on Thinkorswim. I do not trade on Thinkorswim. Don't think that because you have the software on Thinkorswim that you have to put your trades through there. You can if you want, but I don't. I use Tradier, as a matter of fact. But this is the indicators right here on the SPY Super System. This is a 5-minute chart. You can have daily charts, whatever time frame you want. But this is what the indicators are. The bottom thing right here is called the Laguerre oscillator, but it's modified. This is a Laguerre that we strip out divergence and just do straight momentum in this indicator. And these are the indicators that are going to reflect that. This is called the current time frame momentum. This shows what the momentum is, just strictly momentum on the current time frame, the 5 minutes, right? And it's green or blue for bullish, yellow or red for bearish. Right? That's where your colors come in. This is multi-time frame momentum. On a 5-minute chart, this is looking at the 5, the 15, and the 45. This is looking across 3 different time frames to determine if the institutions are in this or not. So this is obviously the same colors, and this is the long-term trend. On a 5-minute chart, usually during the day, I'm just focusing on this pretty much because I'm not going to be in the trades very long. But when I'm looking at swing trades, I need the multi-time frame momentum and the current time frame momentum to be aligned, and it helps to have the trend aligned. Now on the 5-minute chart, these are our indicators that we use on the chart. This is called the VWAP, the volume weighted average price. I hope everybody knows about that, and I hope everybody uses it on the 5-minute chart. This is critical. This VWAP, this volume weighted average price, is an indicator that all the institutions use. This is the main level for entering and exiting trades on an intraday basis, right? The next one I have is this green line right here. This is the 15 EMA. I've got this identified as the 15 EMA. And then the last one is this white one. This is the 8 exponential moving average, 15 exponential moving average. These 3 levels are the support and resistance levels that we use to enter and exit trades, right? We go short if it's going down below the VWAP, and we go long if it's going above the VWAP. Same thing on the 15 and the 8, all other things being equal. All right, so those are the indicators that we use up here. We also have something up here called VOLD. This tells us what the market internals are doing. Market internals this is looking at all of the New York Stock Exchange stocks. This does not apply to the individual stock. This just says, what's the market really doing right now? Is 1,600 stocks, for example, is it generally bullish right now or generally bearish right now? This is what's going to tell you what's going on in the overall market by looking at the total amount of volume on stocks going up minus the total amount of volume on stocks going down. So it's there to kind of tell you what the overall trend in the market is that day, not necessarily this stock, right? Now, the interesting thing about the 8 and the 15 is if you're looking in this on any time frame, 8, the 5-minute or daily, when the 8 is above the 15, you have a bullish trend. When the 8 is below the 15, you have a bearish trend. So it gives you a good indication of the actual current trend that you're trying to take advantage of. All right, and we also have these colored candles. This I'm going to talk about in a little bit after Fibonacci. This is really important. These white candles right here that are going up, these are high volume bullish candles, right? This not only says that the stock is moving up, but it's moving up with very big volume. And a lot of times you'll get multiple ones like this. This tells you that here, when this went blue, the institutions were coming in, and they were coming in again here. They're coming in with really a lot of volume, and that's pushing the market up. When you get high volume with a break of support or a break of resistance, that's really, really a tremendous combination. And the yellow ones, by the way, are bearish, right? These are bearish candles that show high volume to the downside, right? So these are really, we're going to talk about these quite a bit. This is really quite a combination, and it's really honing in on not only just institutions based on the momentum, but how much volume is there in there as well. Okay, all right. Now we're going to talk now. I'm going to spend time now on Fibonacci because I know a lot of folks came here to see about that. So we're going to talk, probably spend 5-10 minutes about Fibonacci candles. We're going to look at some examples of live charts from yesterday to find some Fibonacci candles that could be set up for Monday. All right, so let's talk about Fibonacci candles. This is a chart of Fibonacci candles. It says it's British pound, Japanese yen. I'm not trading FX, I don't really care, but these candlesticks are exactly the same as they would look for Microsoft, for gold, for pork bellies, for the futures, anything. All right, this is what the Fibonacci candles look like. The key takeaways initially is any candlesticks that have flat tops, no wicks in the top, flat top candlesticks, those are bearish Fibonacci candles. Bearish Fibonacci candles with flat tops, bullish Fibonacci candles with flat bottoms, just like that. Flat bottom, flat bottom, flat bottom. These are bullish Fibonacci candles. These are bearish Fibonacci candles. These become dojis with wicks and tails. Right, so another thing to be aware of is each Fibonacci candle starts in the middle of the previous Fibonacci candle, right? Because it's made up of two candles. So they always start in the middle of the previous candle when you see a Fibonacci candle. See down here, see halfway up, halfway up, halfway up. Always start halfway up the previous candle. Right, so that's kind of the overview of Fibonacci candles. Now, how do we use these trading is the question. And what typically that I'm looking for is I'm trying to find, for example, a stock that maybe I like it long and it's falling down. And I want to go long the stock as soon as it gets to reverse and goes through a support resistance level and heads back up again. How do I do that? I'm looking for what's called a Fibonacci reversal, right? And the Fibonacci reversals are one of the key ways to use Fibonacci candles. So this is a bearish trend, and they're pretty big candles. Now, as we come down here, you notice we're getting wicks and tails, wicks and tails. Here's the flat bottom right here, right? So that's a Fibonacci reversal candle to the bullish side, right there. So technically, that's actually a Fibonacci reversal that you could take. The problem with this particular one, and I want to point this out because I do this in every webinar, it looks like a good Fibonacci reversal candle, and you would have made a little bit of money on it. But when you get a Fibonacci reversal candle, one of the things you look for is how big is that candle in relationship to the candles that created the trend, right? These candles that created this bearish trend were pretty big. These are pretty big, so I wouldn't take that, all right? If you did, you'd have made money on it because it is a Fibonacci reversal candle. But what I'm looking for is a real serious reversal. So I look for, I would stay in basically I'd just be viewing this. Now, again, it reversed back here with a bearish Fibonacci reversal here and here. Now we're getting a Fibonacci reversal candle here that's big. See the flat bottom? See how big it is in relationship to these? That is your Fibonacci reversal candle to jump in on this trend. All right, this is where you want to get in. You take it right here, and obviously you're getting more Fibonacci candles with flat bottoms all the way up. Get a wick and a tail, but still nice and bullish. You stay in this trade until you get this red candle and a bunch of wicks and tails. Once the momentum starts to fade, you're out of the trade. That is your Fibonacci reversal trade right there, and that's a nice trade. And that's what you're looking for. You're looking to get in early in the trend when it first just reverses. Okay, that's your Fibonacci candles. So this is kind of the whole thing in a candlestick chart. And we're looking at Fibonacci candles. Let's say, for example, this blue line right here, blue dotted line. Let's say that's a support resistance level, like the VWAP, right? So that's right. That's it right there. So the stock's bearish coming down, but I want to get bullish on this when it gets back above the VWAP again. So here's the VWAP. Here's my Fibonacci reversal candle right here that goes through the VWAP. This is where I take the trade, right here, and I get in right here as it breaks above there. And then I ride this thing all the way up until I start to lose momentum, and then I get out. That is the perfect kind of a trade where you've got a resistance level here or a support level here. It went through the resistance level. If it breaks down below it, that blue line, you would get out, but notice it never does. And then you just follow it up, and then you just will follow the momentum. And one other thing to mention on these candlesticks here, that's kind of important. And I get asked this question a lot. Do I have to wait for the candlestick to close before I enter the trade, like on the Heikin-Ashi candle? And the answer is you do not. Once you're about, let's say this is a 5-minute candle, once you're about 2 minutes, 2.5 minutes into that 5-minute candlestick construction, then the likelihood of this thing being flat bottom is about 95% or more, right? So you don't have to wait. And if this was a daily chart, after about 1 o'clock in the afternoon, if you've got a Heikin-Ashi reversal like that, it's most likely 95% or higher. It's going to be that setup at the end of the day. This allows you to get into these trades when the candlesticks are developing, when the Heikin-Ashi candlesticks are developing. Typically, you can't do that with standard candles. You really need to wait for the confirmation. That's because Heikin-Ashi candlesticks, by definition, are a confirmed reversal. They are a confirmed reversal because they're taking 2 candles to do this. Okay, so again, here's what we just talked about here. The nice move right here through the VWAP with a nice big Heikin-Ashi reversal candle to the upside. You just ride this thing up. Okay, so key things to know about Heikin-Ashi candles. Bullish Heikin-Ashi candles have flat bottoms. Bearish Heikin-Ashi candles have flat tops, always. The bullish Heikin-Ashi reversals are identified by a flat top candle, followed by a flat bottom candle. And bearish Heikin-Ashi candles are exactly the opposite, flat bottom candles, followed by flat top candles. That's how you identify a Heikin-Ashi reversal. All right, remember this, and this is really important in trading because this is going to give you a really edge if you're able to find some of these and enter the trades at that point. We're going to look at some as well. So what's the some of the advantages of Heikin-Ashi candles? First thing it does is it smooths out price action, reducing the noise. This makes it much easier to stay in a trade. And this is really important for retail traders because if you're a retail trader looking at 5-minute charts, you get an awful lot of herky-jerky action, and you get a big red candle all of a sudden, and if you panic, and it panics you out of a trade, and the next one comes right back green again, moves right back. If you were watching Heikin-Ashi candles, that would not be the case. You wouldn't know it until there was a reversal, until there was at least 2 candles. So that's important. Smooths out and it reduces the noise. It obviously makes identifying trends much easier. It improves identifying confirmation of trends because they are a confirmation candle, or trend reversals. And this is where I use them the most, looking for trend reversals. And again, it helps identify potential exits when the candle bodies shrink or a reversal occurs. Okay, so those are the recaps of the Heikin-Ashi candles. Now, I'm going to show you, this is just kind of a graphic of, I use another program called TC2000 for my charting, but this is a TC2000 chart. Now, this is one I picked out. This is quite old, but I wanted to identify some regular candles versus Heikin-Ashi candles. This is Uber with regular candles right here. I want you to look at this May 1st time frame right here, this May 1st. All right, so here's a kind of a bounce. This is the 200-day moving average, this pink line. It's bouncing off of there, and then you gap up, and then you gap up. It's very difficult to determine whether you should actually get in on something like this because they look like they're extended, right? So let's take a look at the exact same chart with Heikin-Ashi candles, and let's look at May 1st. All right, gonna look at May 1st. Here's May 1st right here. See the Heikin-Ashi reversal candle? Here's your bearish Heikin-Ashi candles. Here's your Heikin-Ashi reversal candle right there, flat bottom. This is the candle you would get in on. So you would be getting in on May 1st right there. That's where you would enter this trade. It's a flat bottom candle, Heikin-Ashi reversal candle, and you notice it keeps going up with flat bottom, flat bottom, flat bottom, flat bottom. But notice something about the Heikin-Ashi candles here. Go back to this. See the gaps? Gaps in regular candlesticks. Heikin-Ashi, no gaps. Right? So you would have been getting in right here, this on this candle, and this you would have got this tremendous nice gap up the morning, and you'd stay right in it up till up there. That's the difference here. And again, there's no gaps in them. And this candle was on that day is where you would enter this trade, right? You had all the things to indicate that you should do that. Okay, so I'm going to look at some live charts here, and we're going to look at some Heikin-Ashi candles I got some daily ones. We may look at a couple of 5-minute ones. I just kind of want to see what they are. So let me go ahead and bring up my my SPY Super System software. Where is it? There it is. Okay. All right, so here's my SPY Super System software. This is actually the software. These are scans that it comes with it. This is a cascading up scan. This is a relative strength scan, relative weakness scan. These are scans for swing trades. This last one, we got a bear, we got a bull, and these cascading scans, cascading up, cascading down, can be set for 5-minute, or you can set them for daily. So I use them mostly in the daytime for looking at for intraday trades. But this is what you've got here. All right, so that's your scans that you get with the software. Now this is I'm just looking at the stock here. This is APD. Now this is a daily chart. Okay, see it's daily. And what's the style on these? I've got them set to Heikin-Ashi candles. That's all I have to do is set them on Heikin-Ashi. So this is a Heikin-Ashi candle right here. Now remember what we just talked about, right? There's a flat bottom. You see the flat bottom? That's a Heikin-Ashi candle. Here are my indicators, all right? Current time frame momentum is gone blue. That means the institutions are coming into this trade. The institutions are pushing this stock up, right? And also green on the multi-day. So this is definitely a bullish trend right here that I can take advantage of. And this is an excellent trade. And notice the color of the candle. It went from bearish to bullish high volume. They had bearish high volume followed by bullish high volume, which is also a Heikin-Ashi candle. This is a huge, huge setup. And this is a beautiful setup for Monday. Really a beautiful setup for Monday on APD, Air Products and Chemicals. And that's what you're looking for. You're looking for a big volume candle that's got the institutions buying across the current time frame and multiple time frames. Right, a beautiful one. I've got a couple more I want to look at. Let's take a look at VeriSign, VRSN. All right, so here's VeriSign. This is a Heikin-Ashi bearish candle right here. See the flat top, high bearish candle. Now it isn't got high volume. It's not yellow, it's red, but it hasn't got high volume. But it's definitely bearish because you see your current time frame momentum and your multi-time frame momentum are still both bearish right here. So that's a beautiful setup here on VeriSign. All right, so that's another nice bearish one right there. MNDY. This is one that I'm actually planning on doing Monday if the stock opens down. See the compression here? Flat top. This is a Heikin-Ashi reversal. There is where I should have caught it, but I didn't. But now we got another one. And notice the high volume. Yellow candles, high volume. See what it's doing down here? Red across the board. Institutions are selling the heck out of this thing. They have been for a while. You can see it started right here. I mean, if you had caught them right here, you would have caught this whole move. But this is a Heikin-Ashi reversal candle to the downside on MNDY on the daily chart. Right, so it's a beautiful setup for short. Take a look, another one that people might be familiar with, Oracle. How's Oracle look? All right, how's it look on the SPY Super System? Looks bearish. Institutions selling, 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 right across the board. Heikin-Ashi reversal candle. The original one started way up here. When you get Heikin-Ashi candles like this, where it actually has a reversal and then compresses, and then you get another one, that's called the Heikin-Ashi continuation. This is a Heikin-Ashi continuation to the downside in Oracle. Looks like a pretty good short. Couple of other nice longs here, I think. Let's take a look at CL. All right, so here's CL. This is Colgate-Palmolive. All right, you can see the institutions are buying this thing, but notice they had a little bit of selling right here. It's not really much. The momentum indicator was just slipping down just a little bit, but it's right back to blue again. And there's a Heikin-Ashi reversal candle on CL, another excellent long. And again, what you're looking at is are the institutions in? Yes. Is it a Heikin-Ashi reversal? Yes. Are they pushing it up with volume? Yes, they are. They're pushing it up with big volume. When you get these white candles like this, just like you got them here, they go white and green, more white. That's a bullish trend right there that you can follow up with high volume candles. And we're going to talk a little bit more about that because this is a very big deal when you use Heikin-Ashi candles or even regular candles, but you've got high volume and you've got the institutions coming in at the same time. Very big deal. All right, anything else I wanted to look at here? Let's try KMX. Okay, now I did this for a reason. This is KMX. This is a short. See the high volume? It's not high volume. See the regular Heikin-Ashi reversal candle here? So would you want to short this? Now take a look down here. All right, now on the daily chart, the current daily is bearish. Institutions are selling this, but look at the multi-time frame on this trade. The institutions are not selling it yet. So would I take this? I would not. I would not take this until it can prove to me that the institutions on the daily, this is the 1 day, the 3 day, the 9 day. I would need all of those things to be pointing down for me to take the bearish trade to the downside. Okay, so those are what Heikin-Ashi candles look like. That's how you can use them in your trading. We do this all the time. And again, if we look over here, for example, on this bear list right here, if I take a look at the stocks that are coming up on here, all I have to do is click on this, and it's going to take me right to the chart, and it's going to show me, are they all bearish? They certainly are. Sophie looks like a good bearish one. Doesn't have a Heikin-Ashi reversal right now. It did here, all right? But it's definitely a good short. Here's you. This is one that I traded yesterday intraday. Look at how bearish that is. Microsoft, very bearish with just Heikin-Ashi candles here. And JOBY, very bearish. Institutional selling. So these give you some really excellent swing type trades right here. These will show you swing trades for bear. There's also another one in here that's bullish. You can take them. It says bear. In one page it says bull. You can take those. Palantir looks weak. Snap looks weak. Roblex looks weak. So these will give you some really good. There's Oracle in there. This will give you some nice trades for swing type trades. Right now, if we switch over to 5 minute, by the way, we can use this for 5 minute candlesticks as well. And if I look at the get over to the current time frame right here. All right, so this is looking at Oracle at the end of yesterday on the 5 minute. So if I'm looking up here in a cascading scan, I'm going to find, look how strong this one is, right? Here's SanDisk. Look how strong this is. This is a 5 minute chart. See how strong, SanDisk was very strong all day yesterday. It gapped up, looked great. Right here is a big gap up in the morning, off of earnings, big candle, but kind of pulled down during the day. But look at this nice reversal here, and going up to the 8 and the 15. You see that right there, and roomed up to the VWAP and high volume candles. Right. This is how we trade intraday. There's Teva right there, another decent one. MDT, beautiful 60. And you can see this. I'm going to show more of these. You can see this thing going. See how this went bullish right here, went blue. Right there, went bearish to bullish. Institutions are coming in. They're coming in with big volume now. Look at that nice run up in PCG. Same thing with Disney. Now, if you're going to swing it, you'd have to look at your daily chart and see if you wanted to swing it. But this would be a good one for intraday. One of the couple I traded yesterday was I traded silver short. And if you look at the silver chart, I traded this thing short in the morning. Big gap down, and I actually took it over here where see how it broke below the VWAP and came down. See the bearishness here, institutional selling. See we're getting yellow candles. Look at the volume of this thing. This was a really good trade. These options, the puts really went up in value quite a lot. Do I trade futures like NQ and 5 minute? Yeah, you can. You can. I don't trade futures generally, Ken, but you can trade futures. You can trade commodities. You can trade anything you want. The candlesticks and the information that you're looking here, as well as the colored candles, they apply to anything that you want to put in here. You can't do it on FX, of course, but you can do it on everything else. Absolutely. Bear spreads. Yeah, I do put spread spreads and put debit spreads. I'll do a put debit spread for a bear spread, or I'll do a call credit spread for a bear spread for a spread. Yeah, we do a lot of spreads. What does silver look like on the daily? Take a look. You're not going to like it if you're long. Right there. There's your daily silver. Heikin-Ashi reversal candles to the downside. I mean, this was a very unusual flush yesterday in the market. If I switch this off of Heikin-Ashi and I go to regular candles, all right, there's this big gap down yesterday on silver. And this is why I took it long. I had a catalyst to the downside on the 5 minute chart, which is what I was interested in. And that's why I traded this short to the downside. I wouldn't hold it overnight here because you see what you saw in the daily chart. Is it going to keep going down? Maybe, but I'm not going to trade against this. Okay. Do I do 0 DTE? Yeah, typically, Luis, thankfully you're not long. Yeah, you and a lot of other people. It was, listen, the silver was parabolic. I mean, look at this thing. I mean, if we look at the length of time, what this has been doing, this was a parabolic move in silver, same as it was in gold. So it's very dangerous to try to be taking up there. That's where greed takes over. All right, so this is what I traded. One of the ones I traded yesterday was silver. And I'm going to try to talk about this in a bit. I do 0 DTE on SPY, Qs, IWM, any of the indexes that have 0 DTE. Like for silver and gold, they expire every 2 days. They have Monday, Wednesday, Friday expiration. So what I took yesterday was Friday, so it was a 0 DTE. But when I trade the SPY, the Q, the IWM on a 5-minute basis, I'm using 0 DTE until after 1:30 in the afternoon. After 1:30 in the afternoon, I switch from 0 DTE to 1 DTE, and not because I'm going to hold it overnight, because I want to mitigate, reduce some of the time decay that can occur. All right, because the time decay on a compression is pretty high on 0 DTE day. Okay, all right. So those are Fibonacci candles. Let me go back to the presentation here. I'm trying to do stuff with live charts, and so we looked at some live Fibonacci reversals. Going to look at the SPY Super System just a little bit more here. Again, on the SPY Super System chart layout that I showed you, it's optimized for clarity and precision. I added the 8, which really helps a lot because it can be used in conjunction with the 15. And then I added the high volume candles. And the high volume candles aligning with the SPY Super System current momentum indicator for bullish or bearish increases probability of success and larger profits. This is a huge buying signal and selling signal. Really very profitable. All right, so here's the system. We looked at this already. There is your gear indicator right here that's modified, current time frame momentum, multi-time frame momentum, long-term trend. This is all you need on a 5-minute chart to trade intraday. This is all you need, along with the VWAP, the 15, and the 8 exponential moving average right here. Here's your support resistance levels. Here's things telling you what the institution is doing, and here's your high volume candles. All right, very important. The high volume candles have been a new addition in there. They make such a big difference. All right, you also, if you buy the software, if you're interested in mostly intraday trades, you get two formats. You get this one here, and then you get this template, which just shows the current time frame momentum. Because if you're trading intraday, this is all you're interested in. You don't have to look at the multi-time frame. It's not that critical on a quick trade that's going to last 5 or 10 or 15 minutes, right? But so you get this, also get this particular method as template. All right. So here it is again, same thing. I'm not gonna beat the death on this thing. This was a trade we took in NVIDIA, by the way. This was a 5-minute trade here. This was before I put the high volume candles in. But you notice the institutions here went from selling, red, to buying, blue, right here. And notice how the stock broke up above the 15 and above the 8, right there, and off the VWAP. That's where you enter the trade. That goes from 185 to 187.47. Nice trade for I think we made about 35 or 40% on intraday trade on that one. It's a SPY trade. This is a beautiful SPY trade to the downside, right? This is a 5-minute chart again, right? So the SPY is coming sideways. You see how we get this flush down right here, and the institutions were buying it, and then they started selling it right there. And they did it with and I don't have high volume candles. I'm going to show you some more of those. But see the pop out of the box symbol? These arrows, they'll tell you when the compression is breaking. This is breaking to the downside. So this is where you would grab the trade right there, which is where we did grab the trade. Institutions are selling, and they stay selling all the way. And as long as it stays below the VWAP and below the 8, you stay in the trade. You notice how it stayed all the way down. It popped up through it here and then came back. And I probably would have got out right here because it's losing momentum. But it hasn't actually broken momentum yet. Okay, and again, this is another SPY trade here to the long side. Selling, buying, popping up, moving up beautifully right there. Another nice trade. This was a Tesla one we took in the morning. Same thing. Institutions went from selling to buying. It moved up off the VWAP, and it topped out right there. And that was Wendy's. This was an overnight trade on Wendy's right here. Again, the institutions right here were buying, and then they went to selling, and the stock broke down. We took it right there, and we flushed down overnight, and we took profits right there. That was a fairly quick day trade, overnight trade. Okay, so just to kind of emphasize what's going on here, you've got a person here trading with emotion. Remember, I said you've got to be able to keep emotion out of your trading. All right. What are the green and red dots on the candles? Oh, okay, let me see if I find these. This, I took this out, but these green dots here, and the red dots, but the green dots here, these are acceleration dots. These tell you that the momentum down here is about 100. It's about as high as it can get when you've got green dots. It tells you that there's a lot of volume coming in, not a lot of volume, but there's a lot of upward thrust in this, and the momentum is at pretty much near the high. You get green ones for long and yellow ones for short. These I've removed from the chart. You're not going to see these trend dots anymore. I don't use them. I don't think they're any good. Okay. All right, so this is what we're going to do. We don't want to trade like this. This is somebody who's watching their P&L. They get into a trade when it was shooting up in the morning, but they paid no attention to support or resistance levels. And now all of a sudden it's coming back down towards support. And this is what they look like. And again, they're probably sitting there with a bunch of antacids next to their desk. You don't want to trade like this. And the way to keep emotion out of your trading is to have a solid methodology, have indicators you can have confidence in, and don't be watching your P&L. Because watching your P&L automatically creates emotion in you. You look at the P&L, it's green, all of a sudden it's red, it goes back to green again. You don't even look at the technicals, you just get out because you're relieved. You don't want to be trading like that. Okay, and here's what it looks like if you've got some methodology, a system that you can use. You get the SPY super system, you know when the institutions are in there, you can see that they're pushing volume. This is what gives you confidence. And not every trade is going to work, of course, but 85 to 90% of the time they will. All right, so again, the process precedes results. And what I'm trying to get across here is to learn the procedures that we teach and what we have with the SPY super system, and they're not very complicated. I'm going to show you them in a minute, right? And once you focus on those and learn those, then you're going to be in a position to start to make money. If you're focusing on your results without having a solid process to follow, it's going to end in failure. It just I've seen it over and over, hundreds and hundreds of times. Just because you were a losing trade doesn't mean the strategy that the trade was bad, and just because you were a winning trade doesn't mean the trade was good. I've seen a lot of people take really bad trades, make money on it, and then do the same thing again and again and again because it worked one time for them, and the next thing they know, they blow up their account. All right, so this is the high probability trade setups. Now I put up at the top here, a daily and 5-minute chart should be aligned. The most important thing is here, if you're going to take a swing trade, the daily chart needs to be bullish if you're going long, bearish if you're going short. This is important. Now, if you're only doing intraday trades, you're only going to be interested in the 5-minute chart. But if you're going to be taking a trade for a swing, you use the daily chart first. And any of the alerts that I send out typically are structured to be swing trade trades. So you don't necessarily have to get out of them the same day. I may get out of them the same day sometimes. But if you're on an alert service and you can't intraday trade, for example, then you can hold them overnight because I'm using the daily chart as my key for any trades that I do an alert on. Then you want to trade with the trend, both the stock and the market. We've talked about this. Bullish trend, you want to go long. Bearish trend, you want to go short. Then the SPY super system must align. If you're going for a swing trade, the current time frame momentum and the multi-time frame momentum have to both be bullish for a long and bearish for a short. If this isn't the case, I'm not going to take the trade. I mean, I scratch it out. I'm not going to take it. Then you look for relative strength and relative weakness in the stocks that meet those criteria, and then you look to buy near support and sell near resistance once they come down here. And you know, we do some additional technical analysis to find the best of the best. But this is key. This is basically the trade setup funnel that you're going to learn and use. You don't have to use your MACDs. You don't have to use RSI. You don't have to use Fibonacci. You don't have to use anything else that there's out there. There's a million different indicators, which, by the way, I've used all in my training career to try to find out which ones worked. Okay, now in the alert service, by the way, it's designed for day trades and short-term swing trades. This is not an investment service. Designed for traders who can't watch the market all day. It's going to send out real-time alerts on high probability trade setups. And again, high probability trade setups, how are we finding them? Institutions are in them, and market internals are in our favor. Okay, and this is my equity curve for the year. You know, I don't like to talk about myself and my profits. What we're really interested in here is, and you are, I'm sure, is your profits. Can you make money? That's the key here. All right, now I'm going to talk about these high volume candles again with the SPY super system, and I'm going to spend some time on this. Then I'm going to show the results. I'm going to zip through those fairly quickly, but I want to talk about using the SPY super system indicators in conjunction with the high volume candles to find the best entries, because this is something that's really effective. I mean, really effective. High volume candles are white for bullish. High volume candles are yellow for bearish. Okay. We're going to look at some live charts to see the SPY super system indicators and the high volume candles in action. And this combination identifies not just when institutions are buying or selling a stock, but when they are buying or selling with major volume, right? Very big deal to know. And that's whether you're looking at a daily chart or a 5-minute chart. All right, so let me go ahead and I got some I want to look at. Let me go ahead and bring up my super system again. Let me go ahead and run this back a little bit so it's not going to be so small. Okay, so some that I talked about here. Silver, I noticed I traded yesterday. Okay, so here's silver. So here's the trade I took in silver yesterday. Here's the time along the bottom here. Here's the gap down. Now that's a pretty big catalyst in silver. This is pretty bearish right here, right? But you notice it's just kind of compressing. The institutions are selling, they're buying, they're selling, they're buying. Now all of a sudden I get a pop out of the box symbol right here to the downside. So I'd be interested in looking at it there. But what I was really looking for was this high volume candle to the downside with the institution selling. So this is where I took the first trade, right there. After that, 11:15. I took this and I rode this thing down to about here. I don't think I stayed in it all the way down here. I think I stayed in to about here. But you have to understand something. That went from 87.99 to 84.89. This on a option, a put option on SLV, that was an increase of over $2.50 a contract. That's a lot. I mean, that's a lot of profit right there. And then I traded it again in the afternoon. Wrong way. All right, traded again in the afternoon. And where did I do it? Yeah, right here. I traded in here. It came back down again here at 12 o'clock. See, it compressed. I took it again right off the 8. See the 8 exponential moving average? I see the high volume. Institutions obviously still selling this thing. I took it here, and that went from about 83.09 down all the way to 71.03. That's $12. This was a massive trade. I mean, it was a massive trade. You're talking about $12 on these options. So you might have got even if you get $7 or $8, $700 or $800 a contract with this. That's what these working with these high volume candlesticks, along with the current time frame momentum down here, does for you. So silver was one I traded yesterday. I also traded U, because U was another big one in the morning. We go back to U in the open, right? So here's U in the open, right here. So where it opened, I took this pretty early, right here. High volume candles, institutions selling, rode this thing down. This was another very big trade, but I didn't ride it all the way down. Once I got a candle like this, I'm out. Right, I got a high volume bullish candle. I took the trade off. Right, but U was a good one. I only traded that one time yesterday. I also traded Roblex yesterday short. I don't think I took any long plays yesterday. So here's Roblex. Where did I take it? Well, you see here, here's Roblex in the morning. Didn't do much of anything, just kind of opened flat. But then look at this candle right here. And look at the institution selling this thing, and look at the volume that's coming into this thing. Huge. And pop out of the box, breaking below the VWAP. This is where I took Roblex. I wrote it down here, and I got 4 candles, 20 minutes on Roblex yesterday. For I think I made on the options, I made about 80% on the options on that trade right there. Right, that's a big trade in Roblex. Let's see, was anything else I wanted to look at? Might have had some those. I took all those shorts yesterday, but I can just look at these and go back and see what because I obviously during the day I can't trade everything because I'm working with the room all the time. But here's the SPY, and the SPY was kind of doing nothing yesterday. Notice how few high volume candles are in here on the SPY. Very few till late in the day. Very, very few. So I didn't touch the SPY yesterday. IWM, which is the Russell 2000 right here. Russell was a little bit more volatile yesterday. Right. So here's this morning candle in IWM, big volume, opened up here, came up here again. But you could have shorted it right here. Institutions were selling it. But again, the indexes were kind of choppy yesterday, so I didn't trade any of those kind of things. I did trade Tesla. yesterday. Again, here's Tesla on the open, gapped up, made a nice move up here. That was a good Tesla long. You see the institutions buying. This was a perfect entry right there. As it came off the VWAP and above the 8, you could have ridden this thing right up here, and then you get out. It came right back to the 8, and you go from these candles here, white ones, to yellow, high volume. These are high volume candlesticks, right? And then I didn't trade it the rest of the day. It wasn't doing anything. I much prefer to have high volume candles when I'm in there. Okay, Doug, when I have a high volume candle, do I wait for the close because it could change? No, the high volume candle, once it's painted, it's not going to change back because it's already got too much volume in it to do that. It's not like regular candles. It's once it's a high volume candle, it's a high volume candle. It's the chances of it ever going back to a non-high volume candle. It may flip right at the beginning, but not once it's created. All right, so there was Tesla. Anybody have anything stocks they want me to look at? I'd be happy to pop one up here if you happen to be trading some yesterday and show you what they look like on the chart. Nope, no special. All right.
Hey, David.
Right, so let's take a just arbitrary look at something. Here's IBM. All right, so these are the high volume candlesticks used in conjunction with the SPY super system. IBM all over the place. Look at this. This is see how it changes color. You're just not going to trade anything like this. This is junk trading, and you're not going. There's nothing in here to find that it would work. But if you're looking at these during the day, you're going to find some good ones in here because this of course is at the end of the day. But if you're going to find something like this, Lucid at the end of the day, see that is TDC. See that nice how nice short that is. Stitch fix on this divine energy on the 5 minute right there. So that's what you're looking for, all right? Ken, do I always trade the 5 minute? I always trade the 5 minute on intraday trades, yes. You don't have to. I mean, I know people, I prefer the 5 minute. It's less noisy. I don't like using 1 minute. I don't like using 2 minutes. Sometimes I'll switch over to the 2 minutes if I'm getting ready to take profits to try to identify the institutions getting out of them quickly. But generally speaking, I'm always trading on the 5 minute time frame, except on swings. On the swings, I'm always taking a daily to look at a daily chart. And it's important to understand that if you get into a trade using the daily chart, then you need to get out using the daily chart. Don't let 5 minute noise on a chart chase you out of a long or a short that you base the daily chart to get into. Do the cascade results change when you change time frame? Oh yeah, like, of course. Yeah, because it's looking at the cascading is looking for 3 candles. 3 candles to the upside that had a higher close, higher close, higher close, and the red downside, higher down, higher down, higher down. I mean, I can change this cascading up to a daily setup over here, cascading up daily, and it's going to show me stocks that that look good if I switch over to the daily chart. It's going to show me exactly what I want, what these look like. So I look at SanDisk. See that it had a low. See how it's got the high volume, but it's yellow. That's because it closed below the open here. But it still was a big day yesterday. But I wouldn't take it. There's SCNTX. That's a nice look on one. BKD. That's another nice one. See how you have 3 candles or more showing a higher close like that going up. So absolutely, you can use that for that. And the same thing in down. I'm not going to go through each one of those, but these scans will find these stocks for you pretty nicely. Paul, ADMA. Okay. You want it on 5 minute or daily? It's 5 minute. You put ADMA in there. Right, there's ADMA 5 minute chart right here. You want it on the daily? Okay. There's ADMA right there. Had a little pop up at the end of the day yesterday. Daily chart's pretty ugly right now. I mean, you see what's going on here. Bearish across the board. I certainly wouldn't be taking it long right now. Barry, still bullish? I'm not sure which one you mean. Hey, Kirk, does this work on futures? Yeah, it works. And yeah, I mean, you can put it on anything you want in here. If I put ES in there, it's going to show you the ES. Whatever symbol you put in there, it's going to give you those whatever time frame you want. That's a daily. But if you Most likely, if you're trading the ES, you're trading off of a much faster time frame. So here's the ES right here. That's yesterday's ES. It's kind of all over the place. Yeah, you can use it for anything you want. Barry, Pepsi, which has been pretty bullish because of the risk off trade, but there's Pepsi right there. This is a 5-minute chart on Pepsi yesterday. See, if you were trading this, if you like Pepsi and you happen to be watching it, and you spot something like this, it goes selling to buying right there. There's a pop above the VWAP, the 8, the 15, with a pop out of the box, high volume candles. You just ride that. You just take that in and just ride it up. That was at the end of the day right there. But that's a nice little trade in Pepsi. And I don't know if they had any other situations or they had a short in the day. It just depends on whether you want to short Pepsi or not, because it was green for the day. Typically, I'm not going to go short a stock that's green for the day. I'm only going to take bearish ones. BRKB, Berkshire. I'm not sure how they abbreviate that in English. When BRK, where's BRK.B? Well, again, it's Berkshire Hathaway A. I'm not sure if they actually have that in here. I'm sure they do, but I'm not sure what it is. BRK. I know that's Berkshire. Okay, oh, Sophie. Okay, SOFI. This is one right here. This was a 5-minute chart on Sophie. Were you interested in the daily or the 5-minute on Sophie? Berkshire. Okay, it's Berkshire/B. Okay. Here's the day. Sophie right here. Here's the daily right there. We got a high Kenichi reversal. We got a big ugly candle here on Sophie for a bearish. Definitely bearish on Sophie. Let me try the BRKB. This oh yeah, Berkshire Hathaway B. There it is. Right there. So there's Berkshire Hathaway. There's the daily on Berkshire Hathaway. And if we're trading it to the 5-minute, there's the 5-minute on Berkshire Hathaway. Barry, OKLO, put daily on OKLO. I'll take a couple more of these, but I don't want to spend too much time on these, but I just want you to see how effective these things are. All right, there's the daily at OKLO. It's definitely short. It doesn't have high volume on this big candle yesterday, but it's definitely a short setup. Selling here, selling here. Kurt, Google. Google, fairly bullish. Kind of a big compression here. This is what's called a dynamic compression zone that it's coming out of. This shaded area right here. And there's a 5-minute right there on Google. Pretty wild day yesterday. Up and down, up and down. All right. Rob, silver. Yeah, we looked at silver already. That's that's an ugly chart. Again, I said I traded this short twice yesterday. I took it here in the morning, and I took it again right here in the afternoon. And the daily chart on silver is a horror show. Okay. All right. Thank you very much, everybody. I appreciate it. I don't want to take too much time. I do want to go over a couple more things here on this webinar. But now you can see what I'm talking about, this combination of high volume when the institutions are selling based on the current time frame momentum. This is a big, big deal. This is really gonna find some really, really good trades for you. Okay, so I'm gonna talk about the results. I've had this room since 2022. I didn't put everything in here, but this is starting my 5th year. But in 2023, if you took $2,000 in each trade that we took in the room, you would have produced a little over 60,000 in profits. 2024, same thing, about 55,000 in profits. Again, a lot of the profitability is dependent upon whether the market is trending or whether it's choppy. Choppy markets, you just can't get as much profits as you can out of trending markets. 2025, was through September was 47,765. It ended up around 60,000 again this year, so I haven't updated it yet, but it's about the same as it was the last 2 years. Again, it's very consistent. That's the whole key here. This is something I'm probably going to take this off. But I was pretty proud of this. This was back in April when the market went way down and then way up on the tariffs when they went on and tariffs came off. The SPY was down 10% in 2 days. We had 4 trades on in the room and on the alert service. We had these on the alerts as well. These were all swing trades. We had AVGO, which is Broadcom. We get in for $75 a contract. We got it for $1.04, 39% profit. We get into Nike for $2.85 a contract. We closed it for $9, 216%. And this is not normal. This was the biggest trade of the year, and this is really an outsized trade. This tariffs helped us a lot on this. Nike makes all their product in Vietnam. It was supposed to be a 39% tariff in Vietnam. Nike dropped like a rock. We took advantage of it. And we had Sarepta short, made 78%, and we had NNE short, made 25%. Only 4 trades that we had on. That was a big month for us. All right, so just kind of looking at what's going on right now. I haven't updated this through the end of the month, but so far at the beginning of the month, we started with 7 wins, 1 loss. 2,000 invested so far, about $1,800 in January. And look at the percentages. This is what you're going to get. You have to get used to seeing. 11, 15, 22, 51, 34. This is the range that most of us trades are in. Right. This was June of last year. Again, I was on vacation. I was out for a couple of weeks. We had 10 wins, 1 loss, 91% win rate. 2,000 in each trade generated 37.90. And again, 20%, 23%, 25%, 42%. This is what you'll see on your trades. Don't be thinking you're going to get 400 or 500% on the trade. All right, this was July. We had a lot of trades in July. Back from vacation, I must have been well rested. We had a lot of, it's just how many setups we get. This is a lot of trades for us in 1 month. And you can see the percentages are hanging around the same. 30 wins, 3 losses in July, 91% win rate, a little over 16,000, almost 17,000 in the room on 2,000 per trade. But really a huge month. August, 84% win rate, 5,900. September, I don't know why I put all the trades in here, 47, 44, 84% win rate. Again, here's their percentages. See how they stay around the same amount. And we do have losses. Please be aware, we have losses. January to September, this past year, 155 wins, 28 losses, 85% win rate, and 2,000 invested in each trade and produced 47,765 up through September. All right. I'm going to zip through these. This is back to 2024. I did this because I wanted everybody to see what the percentage gains you can expect. All right. This is what you can expect on these trades. On the UMCAT trades, the ones that are the out of the money catalyst trades for the 5-minute chart trades, and the SPY super system trades, which are 5-minute, they're going to produce more money than this. None of those are in any of these. Those are all separate. Okay. February, again, 24 and 2. 92% win rate. So I'm just going to skip through here. Again, we had winning months every month except for September last year. We had a losing month that lost 1786. The room lost 295. Terrible month to trade, but embarrassing win rate. But again, we had in August we had 45.35, lost 1786, and then made 74.48 in October. So pretty nice recovery there. All right, there's November. So I'm going to just kind of run through these things. I think, you can see that we make about 85 to 90% each month on the trades. And, the profits vary from, 15, 1,800, 2,000 up to about, 16,000 is a lot. Typically around 7,000 or 8,000 is normally about max on the months we make. At 2,000 per trade, obviously it's going to be dependent on how much you put into each trade. All right, and here's what the alert looks like, by the way. You're going to get an alert that's going to say the date. It's going to say the stock symbol. It says, like in this case, it was by the April 11th, 67 puts. So there is your expiration date, April 11th. There's your strike price, the 67. You're buying puts, so we were short for 285. That would be the whole first alert. The next one would come through. It would say the same thing, and then it would say sell order for $9. Going to tell you what to put it in for. And then when we sold for $9. It comes through. And if we had adjusted this later on, there would have been another alert to tell you when the adjustment price. Okay. Okay, how do we achieve such stunning results? I'm not even going to talk about this. We know how we do that. You saw the SPY super system. We know when the institutions are driving a trade and when the market in turn is bullish or bearish, we take advantage of that. All right, and how we do this again, we look at momentum. I showed you that. This is a big deal. We look at trend. We also look at some money flow in there, but this is the main thing that we're focusing on the chart, right? And here's the charts again. Here's the one with the SPY super system for just intraday trades. If you want that one, you'll get it with the software if you buy the software. Again, here's our SPY Super System entry right here. This was a Heikin-Ash reversal candle we took. Notice it was green and then yellow, bearish right there. Take this right here, ride this thing down. Beautiful trade, institution, sell, sell, sell. This is the SPY Super System trade. I'm not going to go into a lot of detail on this. This is very high probability trade setups using the both the high volume candlesticks and the current time frame momentum. These are quick trades. This was based on doing that speed, the SPY, the Q, and the IWM. These are my results because I can't post these; they're too quick. I can tell you when I see one, and I can also I also have a video on how to do it. And a lot of people have learned how to do it and trading in the room now all the time. So a lot more trades, as you can see, but I've never had a losing month on this particular strategy. This was back in 2024 that we started this, right? So I'm not going to go through every single one of those, but they're big profits on these things. Okay, and again, this was more SPY Super System, more SPY Super System. This was the SPY Super System trade, 48.31. This was the room, 74.48. These are my results. This is the room results. These are not, one doesn't include the other. These are completely separate. There is no SPY Super System trades included in the room. Those are all separate, okay? November here, December, and this was the last quarter of 2024. So you can see the profits. I just wanted to highlight that. Okay, so I'm gonna kind of run through these real quick. This is, again, the charts you can see. I think you've seen enough of these. Current time frame momentum goes blue, goes long, we buy it here, we sell it up here. $220 profit per contract. That's on the SPY. That's a SPY Super System trade right there. All right. And there's another one right here. This was 2 candlesticks, boom, in and out. It went red, yellow to red. SPY here again. And SPY here again. See that right there? We take it here, we get out right there. $120 profit per contract on the IWM, Russell 2000, which doesn't move that much. Okay, couple of questions. Cost for the service, I'm going to tell you that in just 1 minute. Do I use trailing stops or watch the trade all day to know when to exit? Well, it depends on the trade I'm in, Ken. If I'm in a SPY Super System trade or UMCAT trade, I'm not going to be in them very long, and I watch them. Now, one thing I have done is once it gets to a certain level and I've got good profits, I'll put a trailing stop on it. But I don't use stop. I'm gonna get out of that. If it goes against me, I'm going to exit the trade myself. Okay, I'm not gonna put it on. I'm not gonna put a stop in there. It's automatic because the market makers and institutions can see that. So I don't do that. So I'm typically watching those, but I'm not in them very long. Those SPY Super System trades or the UMCAT trades, you're in one at a time. You don't have multiple ones on, and you're getting out pretty quickly. Okay. So I just wanted, I'm going to look at this was a trade we took recently. This was a line. This was supposed to be a swing trade. I'll get it on the 5 minute because we get in it, we get out of it. This was an alerted trade. We made 51% in an hour. And I decided that to me, that was the time to take the trade off. You could have kept it overnight and probably still even made more money, but I decided to take it off there. That was a line. This was URGN. This is an old chart. So I'm gonna get rid of this because it's got the VWAP on here on the daily. It shouldn't be on there. But again, this was a nice trade. And the NVIDIA, same thing, pulled down to the 15 and we cut it on the bounce. These are fairly old charts right there. So I'm not going to cover. This was a Nike trade. This is where we get in it right here, 328. It actually, we made money on it the way down, but we stayed in it. Notice how sell, sell, sell. Everybody's selling. Institutions are selling the heck out of it. We catch this gap down, 216% profit on that one. All right, and Sarepta, that was another one. You can see. What are the institutions doing? I mean, it's really not hard to see when they're all red like that. With HIMS, this was a nice bullish trade we took. Right up. Again, so now that's all the charts I'm going to show you. There's millions of them, obviously, but I think I tried to show you the Heikin-Ashi. I tried to show you how to use the high volume candlesticks along with the current time frame momentum on the SPY Super System and how effective that is and I'm gonna print some results on this pretty soon because I haven't been using the UMCAT very long, but it's producing really, really outstanding results. All right, so again, here's our strategies we use. We talked about this, straight calls and puts, straddles and strangles, etc., debit spreads, all of these we talked about. Here is our intraday strategies, SPY Super System. and UMCAT. UMCAT is kind of like this, except we're using out of the money for very specific setups, which they produce a much higher ROI, return on investment. Okay, so these are the offers for the room. This is the live trading room and the text alert service. You can get a 2-week trial here, which you're going to get you're going to get the text, you're going to get the trading room, you're going to get. I have 31 modules out there, videos to watch on everything relative to the software in the system we're trading. All of the indicators, all the strategies, one on straddles and strangles, one on SPY super system trades, one on UMCAT trades, debit spreads, credit spreads, weekly ATMs, everything. I've got videos on all of that and how to use them. You also get access to a private Discord chat. We've got a couple of other professional traders over there, right? So that is for the quarterly membership is $396 right now in this special. If you put save 50%, $396 for just for a quarter, and you get 2 weeks. And of course you can opt out anytime you want on the first 2-week trials, or you can do a one-time payment on the text alerts and the trading room. This is forever. You get into it and you're in for good. It's $24.96. Now there's one here that's not showing up, but you can also get this annually. If you talk to Rory, he'll give you the annual price. It's about $11.97, I think, for the annual price on the one-time payment. For the week yearly, that would be annual. We get the text alert, you get the trading room, you get the options modules, all the training modules in the Discord room. So $24.96, $11.97 for the year, and $3.96. Of course, this is the best deal because it's cheap over time. But the annual is also pretty nice, a lot cheaper than the quarterly. Okay, now you also have the SPY super system, and this is the software that we just talked about. This is the SPY super system. This is exclusive pricing. This is if you save 50%, this is an annual membership for the SPY super system, the software. You get the software. Rightline will put it on your machine. They'll put it on Thinkorswim. You don't have to be a member. You can download Thinkorswim and they'll put it on there. You don't have to pay for it. You get the software. You don't have to pay for Thinkorswim. You have to pay for the software. The SPY super system software. You get 1 month in the options trading room if you buy this for a year. You get the scanners, of course, with the as I showed you. I didn't spend a lot of time on those because there's more of them, but I just kind of want to touch on them. You get obviously my modules on training, and you get an installation and setup. You get any updates that come along. We just added these high volume candlesticks recently, so everybody who owned it got that. All right, and so that's $9.98 per year. That's put in save 50%. If you want a one-time payment, this is forever. The SPY super system software, you get 3 months in the trading room. You also get the scanner, the Discord room, and all of my training modules, and it gets installed in there. $19.98, you own it forever. So whether you're in my room, not in the room at that point in time, it doesn't matter. You're going to have all the indicators that we're using in the room to find these high probability trade setups. All right, really, really cheap. That's 50% off. This one is save 50%. These are the this is for the software, and the software to me is it's like a no-brainer. I did this return in subscription investment looking over the last 3 years, and annual subscription $1,600. This is obviously the most you'd pay if you're doing quarterly. But the average, if you're putting 2,000 into a trade, assume all trades were taken. The historical results is the return right now is 40x return on investment. So you're getting 40 times what you paid for the room. You're getting 40 times that back each year. 40 times the subscription cost. Obviously doesn't include how much you're putting in the trades, but this is what the results have been. And so the subscription is consistently paid for itself every year. Again, ROI, simple math, proven results. And of course, past performance is not indicative of future results. Trading involves risk, and I think we all should know that's the case. So those are your offers: the text alert service and the trading room, a 2-week trial, a quarterly membership $396, one-time payment. This would be having it forever. You'd be in the room forever. You'd have a text alert service forever, and $24.96, or I believe $11.97 for the annual. You'd have to check with Rory. He'll give you the information on that. All right, and then here is the SPY software, SPY super system software. $9.98 for a year. This is really a tremendous deal. $19.98 forever. That I got it for forever when I got it. Of course, I wasn't part of this when I found the first software, but it's been we've improved it tremendously since I first got into this. Okay, and if you go to the chat box right now, I believe that yep, you'll have all of the links are over there. Yeah, don't sorry, just reading the message here. Yeah, all your links are for both of these are over there in the chat box. You can just click on them and it'll take you to the offers. Okay, and sale ends Sunday. Just to be aware of this. There's Rory's number 786-732-4656. Again, 786-732-4656. Sarah, is this recorded? It is. Yeah, you'll get one. I don't know if I went over the high volume candles. I did. I spent quite a bit of time, Sarah, on the high volume candles. But there'll be a video. They should probably get it tomorrow or on Monday. Okay. Okay, great. Thanks. Thanks, I appreciate that. Okay, so that is wraps me up for the day. I appreciate the opportunity to speak here at Traders Corner. Thanks, Anthony. Appreciate it very much.